everyone, Cameron from Rion Capital here, and welcome to our broker series. Today I'm going to be talking to you about the difference between a mortgage broker and a commercial broker. What do they do? What are the products that they provide? And a little bit about the minimum qualifications as well. And then I'll go into what we do here at Rion and how we differ to the rest of the market. There is a video that I've been talking about doing, which is the trade and cash flow finance video, and it'll be over a series of different videos, so keep an eye out for that. That is going to come. I did this presentation recently. It resonated with a few people, so I thought it would be a good point of view to put that out here as well. But here we go, and let's get started. So this is our disclaimer. The information in this presentation is general in nature. It doesn't necessarily pertain to you and your personal circumstances. So if you do have any questions that you feel interest you, please pick up the phone and reach out. Okay, so what is a mortgage broker? A mortgage broker primarily deals in residential property and investment residential properties. The minimum requirement to be a mortgage broker, basically you do not need to necessarily have a background in finance, but you are required to have a minimum certificate 4 in finance and mortgage brokering. Some other things that they can do in addition to home loans is, some may do personal loans, some may also do asset finance for vehicles, for individuals and that sort of thing as well. But primarily the predominant work that they do is for residential home loans. How does that then differ to what a commercial broker does? So a commercial broker can write residential home loans and investment home loans as well, but it doesn't stop there. They can also provide advice for commercial property lending. Some may specialize in asset and equipment finance, and they can also provide advice for business finance, business loans, and business lending. Qualifications required for a commercial broker is you need to typically have at least 2 years in commercial finance. You need your certificate 4, as do with your mortgage broker, but they all have to go a level up and get your diploma of finance and mortgage broking as well. But that's it. Ultimately, you need to it's really just that little bit of a different skill set. Now, some actually might specialize, some might not even write residential home loans, but often or not, you'll actually get experienced ones will provide cover all bases at the end of the day. How do we differ here at Rion? So yes, these are the services that we provide. We provide residential home and investment property lending. We do commercial property as well, asset and equipment finance for both individuals and businesses, and we do business finance. Some niches for us. So debt structuring. What is debt structuring? Debt structuring is actually looking at the holistic sort of picture. We take into consideration the business and what it needs. We take into consideration the directors and shareholders and their personal needs, and we can take a holistic view of everything and provide a complete package of services rather than looking at things individually or specific to a particular need. It's a more rounded service. Trade and cash flow finance. So I touched on that earlier. That's actually an an expertise of ours. I personally have worked in trade and working capital for 15 years before getting into more general banking and a broker. I did that in Australia and in the UK, and well versed in that area. Acquisition funding as well is another area of ours that we specialize in. Not all commercial brokers actually provide. Acquisition funding is obviously if you're looking to buy into a business or you're another business looking to buy another business, and the potential things to look out for in the pitfalls, and what's the best way to actually acquire funding to be able to do that. Some qualifications for us. We have 20 years in commercial banking and finance, both here and in the UK. I personally have my certificate 4 and diploma in finance and mortgage broking. I also have a banker accreditation through Macquarie University, which was a 12-month course, which was sort of internal with Westpac and external with Macquarie University. It's a recognised accreditation now in the banking sector. I have a graduate diploma in applied finance as well, majoring in banking, and slowly but surely I'm on my way to finishing my master's in applied finance with CSU. So it's a little bit of an upskill. It's really important to point out here that this isn't meant to be having a go at brokers. There are certainly some really good mortgage brokers, there are certainly some really good commercial brokers, but as you can see, given the minimum requirements to sort of come into the area, you do get some average ones. So there's some things that you obviously want to look out for when you're speaking to a broker. Number one, how long have they been in finance before they became a broker, and what was their finance background? How long have they been a broker for as well is always a good question. Another question is, who are they accredited with, or how many banks are they accredited with? For instance, if your broker is only accredited with 4 or 5 banks, you're being really limited in terms of what potential advice they can actually provide you with. Here at Rion, I personally am accredited with over 40 banks for our residential mortgage book, and I am also accredited with additional other commercial lenders as well. So we have a raft of variety and options here. So that's the difference between commercial and mortgage brokers. I do want to give you a bit of a market update, obviously because everyone's talking about interest rates and property prices at the moment. And yes, whilst we are seeing interest rates coming up and property slightly coming back, I think it's important to actually look at the bigger picture here. Bill Evans actually came out this week and has released his forecast for the next couple of years, and it's really important to note that he is now forecasting from next year we should actually start to see at least 7 reductions. It's not to say that we're not going to possibly see another couple of rate increases between now and June, but what they are sort of forecasting is that by the second half of the year we should start to see things starting to stabilise. Inflation should start to plateau. Home loans or home prices should actually start to stabilise a little bit, and what we're also seeing is that with wage growth not sort of being quite where they want it to be, and obviously we're going to see a lot of home loan customers start to feel some pressure with their 2% or roughly 2% fixed interest rates coming to a break this year. That's going to put a lot of pressure on the market. Then the RBA is going to probably want to hold interest rates for a little while just to stabilise things, but then there's going to be a call to start bringing that back as the banks start to forecast potentially for some doubtful debt. Then the RBA is then going to be under pressure to reduce and start reductions. Now they're calling for 7 rate reductions over the next couple of years after that, starting from March, which is a good thing. I think it's really important to understand what the historic interest rate has actually been over time, and I'm just going to use that, and I'll put that up on the screen so you can see it as well. But ultimately the black line that you can see, or the dark blue line really is basically the historic cash rate. Now obviously there's an outlier which was starting in the early 90s, but historically over the last decade or so we've been under the historic average interest rate, and we're doing pretty well. We've hit obviously the bottom there, which was really during that COVID period, and that actually had a massive impact on home prices or house prices, and that actually saw an increase during that period alone over 12 months. House prices increased by 30%, which is a ridiculous amount. As a homeowner, I certainly enjoyed that. But I think there needs, from an economic standpoint, there needs to be some stabilisation there. The pink line is actually Bill's forecast over the next 2 years. So you can actually see that whilst we are going to get another sort of slight pickup, it's going to start coming back down, and he forecasts, I think, them to end at around 2.3, 2.1% as the cash rate. And the important thing is to note there is that we're still well below the historic average. So people need to realise we've still got it good. Yes, we're going to feel a bit of a pinch in our pocket towards the end of the year, but it's going to start to stabilise, and we should actually start to come back and well below the average mean. But guys, that's ultimately it. Thanks again for listening in and paying attention. If you have any questions, please feel free. My name's Cameron, but I look forward to hopefully seeing you in the future.